The oil market is fraught with uncertainty. That's proving true as crude pops 5% today now after the U.S. imposed more sanctions on tankers carrying Russian crude, saying two companies have violated that $60 price cap. Joining me now to discuss, pleased to be joined by S&P Global Vice Chairman Dan Yergin. Dan, welcome to the program. Good to see you again.
Thank you, Kelly. Good. Likewise.
Please, it's almost like I don't even want to ask you. I'd love to hear from you what you make of all the developments in the past week and what it means for the oil market.
Well, I think that we already had a tight oil market to begin with. Obviously, what's been hanging over it is the threat of a slower economic growth, downturn, higher interest rates. But I think right now, what you have is just more geopolitical risk going into the price of oil, volatility. Nothing's happened right now. Supplies are stable. And as you noted, the U.S. government finally saying it has to, crack down and actually demonstrate that sanctions are really going to work for exceeding the $60 price cap on Russian oil. So you have two theaters of conflict, Ukraine and the Middle East at the same time.
Why do you think the U.S. is choosing now to crack down on Russian oil at a time when we've already seen crude high, pushing down consumer sentiment, as we learned this morning? It's a big risk here to the U.S. It's probably one of the biggest spillover effects. But do you think it's in part because they look at the experience of Iran and how much their oil output has increased and, kind of figure, well, OK, you got to be on this?
Well, I think, Iranian production's up 500,000 barrels a day and has found ways to evade sanctions, including shipping through Malaysia. But I think here there's been just this kind of rising discussion about the fact that price cap worked well when prices were below 60. But where they are now, Russia is evading them and is making a lot more money again. So remember, the price cap had two purposes: keep the oil flowing, but drive down restrict Russian revenues at the same time. And the second is not happening. And I think it's fine. You want to say that these sanctions are not theoretical. They are going to be applied. And sanctions are something that will make people think twice about trying to evade them.
What do you think we should expect for the supply of Iranian barrels into the global market from here on out?
Well, I think at this point, we may well see an effort to tighten U.S. sanctions. We've seen about the Biden administration holding back on that $6 billion. And I think but it really will depend. There's still the unanswered question about what was Iran's role in this whole event and how much did they actually directly support it. So I think at this point, oil generally continues to keep flowing, but the next few weeks are going to be very volatile. And if we have an escalating violence, then there will be more questions about the flow. But one thing to be said, we're coming up next week to the 50th anniversary of the oil embargo of 1973. And the exporters, the Arab exporters in the Gulf, have no desire, no interest in reducing supply for political reasons.
Well, can you just explain that for a moment? Because they could choose to seize this moment, again, depending on what happens with Gaza and so forth, to respond globally and really exact more pain in developed countries like the U.S.
Well, I think the difference is in 1973, the U.S. was on its way to being the world's largest importer. Now it's by far the largest producer. It would be very disruptive of their relationship with the United States. Clearly, they'll be under pressures as it goes on. But I know obviously they've already cut back supplies for other reasons to put a floor or keep a floor under the price of oil. But I don't think that they would have any interest in disrupting a relationship with the United States right now, which is very important to them.
Is there anything else the U.S. can do? As you mentioned, we're already going at pretty much flat out levels, amongst the highest production numbers we've ever seen in this country. We just had the Exxon Pioneer deal. I don't know if you think that will affect supplies going forward, but what other options do we have if we wanted to offset the loss of potentially Iranian and Russian barrels to the global market?
Well, I think the Exxon Pioneer deal will mean more supply because they're going to apply technology on an even bigger scale to increase recovery. At the end of the day, there's not a lot that can be done. There's still the Strategic Petroleum Reserve, but it's rather depleted right now compared to where it was. And of course, the other thing is, and Kelly, you're pointing to this, gasoline prices go up in the United States. That becomes a domestic political problem. There aren't a lot of good choices here. And the number one hope is that with all of the efforts the U.S. is making and others are making to avoid seeing the situation escalate from where it is right now.
Any last points or places you would be watching, Dan, into the weekend, maybe in the next couple of weeks, if we remain at this sort of very tight supply situation globally?
Well, I think that, first of all, people do not want to go into this weekend short.
Yeah.
And I think that's reflected in the price of oil. I think the thing that, to keep your eye on is what happens to infrastructure. Did get much attention, but there was sabotage on a natural gas pipeline between Finland and Estonia, probably Russian, probably connected to the Ukraine war.